And we are working on some other issues, just making sure we're live on the Bookmap YouTube, having some issues connecting to that, having some issues connecting to DX feed. There's just a number of different websites and APIs that are not working this morning. So it's gonna be a fun day, I think. And by fun, I mean full of unexpected surprises. So Chaudhary, and I apologize in advance if I mispronounced your name there, buddy, but let me know if that helps with your inquiry. And the market is open here. We're going to just quickly switch views for a moment because I do want to show you the active trading, and we're still waiting for this to kind of backfill some of that data. So let me pull up a different copy of Bookmap while that does its backfill. And there we go. Selling pressure, but not really moving price here, at least yet. For folks out there that are wondering, is it just me? No, the internet, wherever you're experiencing an issue, is probably related to Cloudflare. And let me see if I can get you a link to that. Yeah, okay. So here's a link, but just bear in mind it won't it won't work for you probably until Cloudflare is back up. The whole centralization of the internet is really not fantastic. We are seeing pressure increase, new lows made, getting close to the pre-market lows, new regular trading hours low made. You can see with that green line dipping to a new low here. You can see a lot of order flow crossing. We're going to move back to the local copy of Bookmap here now that it's caught up. And I just expect this to be a sloppy open overall with everything that's going on right now. But with any luck, we'll see Cloudflare climb out of this outage and things will get a bit more normalized. That all said, however, I don't think any of what's happening right now really helps the temperament of people thinking positively about the cloud growth narrative or the centralization of the cloud, these hyperscalers and other companies like Cloudflare dominating so much of the internet. If there's even a hiccup, we can't do all sorts of things that we need to do to be productive. And that starts to generate some interesting inquiries about maybe this isn't the best path. Maybe we should be more decentralized as the internet's original founders and engineers had intended. Loki asks, NVIDIA is going to report. You think they're going to beat, or, I mean, that's the $5 trillion question, isn't it? What happens with NVIDIA? Big move off the lows here, by the way. Seeing a fair amount of stop outs from some of the folks that were short earlier. They're going to get a lot more nervous above 66.95, where there's a large sell side delta in the volume profile that coincides with key one negative and a point of control. So that 66.95 is going to be our daily pivot. But in terms of NVIDIA, I think they probably will beat. I think they probably will raise, but I think that there's a greater chance that people get more concerned about the narrative around growth because what they guide for is basically built around a lot of these circular deals and hyperscaler AI capex and otherwise And I question how much of that is really necessary. When AI is becoming more efficient, you don't need as many GPUs to train or infer, or specialized models are becoming more popular. So, again, less total resource utilization, or self hosting specialized models is becoming popular, meaning you don't need the data center at all. Um, and then where the use cases that are constructive at the enterprise level have yet to really materialize at a scale that matches the growth and the investment. So I think that there is a very good chance that Nvidia beats and raises, but gets a mixed reaction. And analysts may be a little bit more skeptical this time about the narrative too. That's what the market's kind of pricing in. So it's going to be a really big event. I expect Nvidia stock to trade with a higher level of volatility, probably plus minus 6%. But at the end of the day, I think that the narrative is going to remain challenged practically whatever they say, because we still have yet to see some of the core problems with generative AI solved so it could be used in the enterprise. So, low-key, let me know if that is a helpful response. It's kind of unpacking some of the things that I'm seeing in the NVIDIA growth narrative. And just really quickly, we're going to pivot over to my other chart. I just want to show you first, in the NASDAQ, you've got that magnet level overhead. That is something worth watching. We've got that pivot just below. Both of those are levels that we've been trading between. If we can push above that magnet and build some acceptance above there, I think we've got some solid chance of making up a lot of the lost price action overnight. That is to say, maybe we could get back into green territory. On the other side of it, however, if we break that lower pivot, it does look likely that we get some decent continuation to the downside. So I've been asked to explain the SPX options visualizer levels and how the market is expected to react to them. And I'd be happy to do that. So the SPX options visualizer is a tool that I built. And initially I built it for my own trading. Then I shared it with members of my Discord on traderaid.com. And then eventually I built it out as an API that can be plugged into Bookmap or MotiveWave. It analyzes all the strikes of the S&P 500 index options. And then from that analysis, every minute throughout the trading day, updates important gamma levels and areas of flow. So in terms of the flow, and we're seeing yesterday's flow with the hot put, that's the most active put strike. The warm put's the second most active put strike. As we zoom out a little bit more, you can see the hot call, that's the most active call strike. Yesterday was a pretty nasty day. Puts were heavy. You can see puts were trading in excess of calls. And that was one of the reasons that we saw nasty price action during yesterday's trading, was that put heavy tilt on the SPX. So when you see the top two puts outpacing the top two calls by a meaningful amount, say 30% or more, that can add to downside risk. And often you'll get right down to that most active put strike. The same is true on the inverse when you have the two most active call strikes trading 30% plus volume versus the bottom, the most active put strikes. That can lead to a day where you're most likely going to tag the hot call. That's one of the reasons that I often talk on Twitter about these strikes throughout the day, how volume is progressing, what it means for the price action. So that's the flow. Then we have the gamma levels. For example, the put wall is an area of potential support, and these levels will be updated in just about 10 minutes here. So you'll see the refactoring of these calculations as we have enough flow coming through the options complex to make that possible. But a put wall is a large area of negative gamma exposure that can be support. Call wall is a large area of positive gamma exposure that can be resistance. Then when we look at these key levels, those are smaller levels. Key negatives are negative gamma, key positives are positive gamma. Key negatives tend to be support, key positives tend to be resistance. The higher the number on the key, the more impactful that level is. Gamma levels tend to be more magnetic. That's areas where there's options exposure on both sides of the chain. So you can get pulled into those gamma levels and mired a bit, sort of consolidate around them. And then a volatility trigger, that is a level that if you get below it, you're likely to see volatility in the price action increase, and you may get a continuation of downside. Then we've also got the gamma flip level. When you're in positive gamma territory, dealers tend to sell rips and buy dips. So that compresses volatility. So it gives you a little bit more regime awareness. Right now, we're in negative gamma. And that means that dealers are selling dips and buying rips, which increases volatility. So let me know if that is helpful for the SPX options visualizer. If you want to read more about it, you can do so at traderaid.com/SPX. And folks, if you've been looking to pick up a copy of Bookmap at a deep discount, I do have some good news for you. You can do so at traderaid.com/bookmap. Get up to 40% off. Just check out those special offers down at the bottom. And if anyone has any questions, let me know. I am checking through the chats as I can. I know that sometimes there'll be a little bit of a delay between when you say something and when I can get to it, but I am doing my best, I promise. I'll get to every single one. And why did I build the SPX options visualizer? I built it because I noticed that options have a greater and greater impact on price discovery. So if we look at futures trading, there's about 300, 400 billion of notional trading hands across all the equity index futures contracts, like all put together. S&P is obviously the big daddy. But if we just look at SPX index options, it's about 1.3 trillion of notional trading hands every day. And it really is the tail that's wagging the dog. You can see it with how the flow evolves and how it pushes and pulls ES around on practically a daily basis. Are there exceptions to the rule? Absolutely. It's not every single day that options are in the driver's seat. It's just most days. So if there is a tool that could give you some insights or even an edge on most days, would that be valuable to your trading process? It was to mine enough that I decided to build it. And I still use it. I've been using it for 3 years. I've been adding to it, augmenting it, improving the algorithm. And what's really cool is it's no longer just the SPX options visualizer. It's actually the SPX options visualizer is just the core. Now we're going to have NDX, Triple Q, SPY, NVIDIA, Apple, Amazon, Tesla, Microsoft, Meta, all of them. GLD Gold, because that's really popular right now. Those are all going to be available soon. I'm just setting up the infrastructure. But if folks sign up to the SPX options visualizer and lock in the rate now, that rate will stay the same when I'm adding in all these new feeds. Folks that come in later, likely to be a higher rate once I activate all those new feeds. So just a heads up. Legacy customers, original founding customers are going to get some preferential treatment on that, as they should. Pegasus Trade says, good morning, MM. Good morning, Pegasus. Just curious about your thoughts on NVIDIA. So Loki did ask about this, but I'm happy to give you a recap. I think they beat. I think they raise. But I think the market is increasingly skeptical about the veracity of the AI growth narrative because generative AI has yet to show that it is what it's being advertised as. And so 95% of enterprises that invested in generative AI have nothing to show for it. You see AI models becoming more efficient, more use of specialized models these days as well. That means there's less and less demand for these enormous amounts of GPU driven compute. So it calls into question more and more how much of this spend is realistic? How many of these circular deals are going to come to fruition? And so I think that overall, NVIDIA will be fine on its earnings, but I think the market will be increasingly skeptical about its outlook. So let me know if that is helpful. You can see that we are seeing some confluence levels as well. This area of large negative gamma exposure to the put wall, you can see there is an offer up there about 135. You can see some of these also coalescing with these key levels. It's always interesting to see that. I tend to find confidence through confluence. So when I see multiple different areas pointing to the same idea that this level is important, I'll pay more attention to it. A great example of that is this 66.95 level, which we can see on the session volume profile had 44.39 traded to the sell side. So that means that sellers do not want to get above this level because more and more of them will be offsides. So we look at 66.95 as a really important intraday pivot. If we can get above there and build acceptance, I think we have room for this thing to rally in a big way. Obviously, we're going to want to watch the flow and see what is going on with the call buying and put buying in SPX, assuming that Cloudflare lets us, because some of that stuff is behind their infrastructure. But that's going to also give us some valuable insights as to where this market may want to go. So we can see yesterday's flow levels have been cleaned up off the chart. We're just looking for today's to start coming through. You're welcome. Yeah, I'm glad that was helpful. My trading style, let's see. I've been trading for about 20 years and I like day trading, I like swing trading, and I like investing. I keep separate accounts for all of them. When I make enough profits in my day trading or swing trading account, I roll them into my investment account. And it's been a beautiful run. I think that investment account's up like 495% over the last 2.5 years. So it's growth oriented. It's stocks like Palantir that have done really well. And obviously, I'm selling calls into some of these higher levels. I've been rewarded once again selling those 250 strike calls. That premium's probably going to be all mine, be able to pocket all that. It's kind of part of a wheel strategy I run on my investment account. But for my day trading, I like trend days. Trend days are my favorite type of days to trade because, it's more of a set it and forget it. You can move your stops into profit. You can, not necessarily have to micromanage every tick. You can set price alerts. And obviously, you'll have two-sided orders set up, take profits and realize risk or stop outs. So trend days to the upside or downside. That's my favorite day trading environment. And then for swing trades, I like pair trades. I like momentum driven trades. I like trades where I feel like something is wrongly out of favor and beaten up too much. Those are environments that I enjoy. I kind of consider what I do with options on the premium selling side to be a bit of a swing trade. Like the other day when Oracle had that enormous pop into their data center deals that they were making with other companies. I've been a long-term Oracle holder. My cost basis is in the double digits. I sold a ton of premium into that, basically against my entire position, thinking there was no way that move made any sense. And all that premium became mine. All those calls expired worthless. So that's another kind of swing trade I like, is taking advantage of episodic volatility when I have when I have, in this case, Oracle shares, and I'm able to sell calls against a volatility event that doesn't make a lot of sense to me, that doesn't seem like it has staying power. That can be very lucrative, and it reduces your cost basis. It also allows you to generate some kind of yield. Obviously, it's not for newcomers. It's something you really need to understand what you're doing and how you're placing those trades. But that's been a great way for me to generate capital and income and reduce cost basis all at once. For my day trades, I tend to key off the SPX options visualizer and Bookmap, as well as some of the pivot levels. You saw some of those on my other chart. Those pivot levels and that magnet level, all of the stuff that you see on the Motive Wave chart, other than the SPX options visualizer, that's all exclusive to Trader 8. So that's only available on our Discord right now. And so members can tune in, stream, see those levels. There's also ways to access a lot of those levels with our friendly Discord bot named Gur. And I'm on the Discord pretty much all the time. providing insights as I see them. We have a great community there, a lot of awesome people that have been with us for many years. We started that Discord back in the summer of 2022. So we're kind of one of the OGs in that we've been around for 3.5 years, and we have plans to keep it going for a long time to come. And, really, I think that in terms of day trading and swing trading, I tend to favor swing a little more just because for me, it's more of a set it and forget it type of trade. I've got my risk management in place. I have my back testing to qualify the setups. If it works, great. If it doesn't work, I'm not too upset about it. I never have positions so large that they drive any kind of emotional response. And I think that's one of the most important things to learn about trading is learn the appropriate size so that you're interested, but you're not emotional. And if you guys haven't checked out my psychology of trading video, it's on my YouTube. I highly recommend watching it at least once so you can master the mindset because you're never going to be truly successful and consistent if A, you're just following other people, and B, you haven't mastered your own mindset. It's super important. I know that it doesn't seem all that sexy to put a lot of work into trading. It's supposed to be like, oh, I just buy calls and, they go up 100-fold and I'm rich and I retire. But the reality is those are outlier scenarios. You've really got to put in the effort. We're running a business. We're buying and selling inventory, hoping to capture a positive spread repeatedly. That's what it looks like. That's what trading really is at its core. It's a business. So setups, I mean, I like watching the 20-minute opening range. We've just formed that 20-minute opening range, and actually our red and green lines give us a little bit of insight into that. It's a huge opening range. Okay, we're going to just call it like 35 handles. So that implies that you're likely to get a more dynamic trading day. We're starting to look like we want to break to the bottom of that opening range. I would, however, caution that Tuesdays and double breaks are not uncommon. It's about 60% of the time that on a Tuesday, you have an opening range break to one side and then it ultimately reverses and breaks to the other side. So while it looks like it's breaking to the downside now, just be aware there is that possibility that it reverses. And that's one of the reasons we're going to be watching flow here. Speaking of which, we do have the flow on screen. It's relatively balanced between the most active puts and calls right now. So that suggests chop. That brings the midpoint on screen as well. Yeah, exactly, Loki. If you don't have a system, you are gambling. That is the truth. And even some folks that do have systems gamble because they don't stay with their system. They don't maintain accountability with their system. You've got to journal your trades and be accountable to yourself because ultimately no one's going to save you. It's all you. Trading is a journey into your own mind to wrestle your own demons and hopefully master them so you can focus on your strengths. And remember, we're all wired differently. What trading style works for me may not work for you and vice versa. And that's fine. That's the beauty of what we're doing. We do see an opening range break down to the downside here. We can see interest growing in the 6,600 level, 316 on bid. We also see an order book that's a little heavy. You can see on top it says 13,000, on bottom 11,000. That delta of 2.5 thousand suggests it is a sell side heavy order book so far. And it looks like Cloudflare is starting to come back up. So I'm able to share with you some other doodads here, including this heat map of the S&P 500. Guess what we're seeing again, folks? Rotation out of the darlings and into things like healthcare, consumer defensives, utilities. This is what we've been talking about on the stream, that this type of rotation has been going on. I've been talking about it for pretty much the whole month of November on my feed. I don't think this is going to end anytime too soon unless there's a really big catalyst. Is it going to be Nvidia earnings tomorrow? Maybe, but I would be very surprised, quite frankly. But I will be covering that earnings release live. So you can watch it on YouTube. You can watch it on my Twitter, Kick, Twitch, Substack, whatever you prefer. We'll be covering that live through the lens of Bookmap with the NVIDIA options visualizer to show some of those key levels and flow leading up to the earnings. And we are just continuing to plunge the depths. So this is definitely a breakdown from that opening range. We built that acceptance, prices being accepted at these lower levels. The next level of support to watch is key one negative here. That is the second largest level of negative gamma on the chain. And checking in on the flow, it is still pretty balanced between puts and calls. So this is real de-risking underneath the surface. It's real rotation away from some of the leadership stocks and into some of the more defensive parts of the market. NASDAQ down 1.4%, Dow down 1%, S&P down 1%. Across the futures complex, gold is pretty flat. Silver's pretty flat. Crude oil's under a bit of pressure, down about 0.5%. And a little bit of a bid in the rates complex. The 30s, the 10s, the 5s, the 2s, all getting a bit of a bid, bit of a fear bid, quite frankly. Let's take a look at Bitcoin here. This has been absolutely slaughtered lately. We didn't get the rebid at the 50-week moving average as we were looking for. Instead, we got just an absolute crush lower. Could see some interest building at the 91,065 Bitcoins on bid there. It becomes increasingly likely that this may not hold 90,000. It may even get as low as 80 or even 60,000, believe it or not. But the chart for Bitcoin looks pretty darn bad here. Let's just quickly pull that up on screen. You can see the prior instances of rebidding around the 50-week. That's just not a thing. The market crushed that. And we're continuing to drill lower and lower. And to me, I'm saying, okay, there's probably some support just around here, just around 80,000 and change. If we're not able to make that stick, it does become more likely that we get back to the top of where some of these highs were in early to mid 2024. That would be the next area of support, maybe around 68,000. And then below that, you get back to these lows around 54, 55,000. So not a lot of great support structure built on this run higher, but the best that we have close to us is right here, just below price, about $10,000 below price. Let's take a look at gold here. Gold having a pretty interesting morning. Gold was under a lot of pressure earlier. It's rallied off that. Let's see if we can backfill the last 2 hours of data here to show that. So there you go. Big bid off 8 a.m. That's really where gold bottomed in the pre-market. And we had a nice run, about $60 off that low. And now we're starting to roll over just a little bit, just retesting the point of control from below. I'd still rather see gold get back to the 20-week. I still think it's extended. So ideally, we'd see it kind of come back to where it likes to come back to around the 20-week, and we get a rebid from there. We'll see if that actually happens. Gold obviously has a mind of its own. It's going to do what it has to do. But as a swing setup with clearly defined risk reward, kind of understanding more about my process, that would be an area where I could say very confidently that I don't mind bidding here because I know exactly where my risk is, and that is a close below that 20 week. If we get that, I'm no longer interested in the swing long. So keep it simple, but base your anchor off of actual data and price action patterns. Let's go back to the S&P here. Folks, I want to say first, thanks for tuning in. If you're interested to learn more about the SPX options visualizer or pick up a copy of your own for Bookmap or MotiveWave, visit traderaid.com/SPX. That's traderaid.com/SPX. If you'd like to learn more about what we're up to at TraderAid, check out our Discord community, our exclusive trading tools, research, and ideas. Visit traderaid.com. You can use the coupon code Mayhem20 for 20% off your first billing period. And if you'd like to pick up a copy of Bookmap, you can get up to 40% off. Visit traderaid.com/bookmap. Scroll down to the special offers. I want to thank you all for tuning in. I'll be back tomorrow for NVIDIA's earnings, and I'll be back next week for the next session of Back to the Futures with me, Markets, and Mayhem. Have a great week ahead.